Welcome to this explainer. Today, we're unpacking the dramatic and honestly rapid shifts happening right now in the Bali real estate market as of 2026. If you've been paying any attention to this space, you know it's been a pretty wild ride. But look, we are officially transitioning out of the era of easy, speculative money and moving straight into a highly regulated, professional landscape. There's a lot to cover today, and getting this wrong, well, it could be incredibly costly. So let's jump right in.
Here's our roadmap for today. We'll start with the gold rush is over, then look at the 2026 regulatory crackdown, before moving into legal paths to ownership, where capital is moving, and finally, gross versus net yields.
All right, Section 1, the gold rush is over. Let's look at this transition from easy money to hard reality. Buy a rice field plot, build a 3-bedroom villa, list it on Airbnb, collect a guaranteed 15 to 20% yield. Sound familiar? If you spent, even 5 minutes on Instagram between 2021 and 2023, you absolutely saw a pitch exactly like this. It was seductive, it sounded almost too good to be true, and yet it fueled a massive boom for thousands of international investors everywhere from Australia to Europe. And honestly, some of those early movers did incredibly well. But for a whole lot of others, the dream just didn't pan out. Today, in 2026, the gap between the winners and the losers in this market is literally impossible to ignore. Because here's the harsh reality. An estimated 90% of Bali's villas currently sit in some form of technical non-compliance. Yeah, 90%. Think about that for a second. The vast majority of properties out there are missing a critical piece of their legal puzzle. And, as we're going to see in just a moment, the government is absolutely no longer looking the other way.
Now, before we get too gloomy here, I want to be crystal clear about something. The Bali market isn't dead. Not at all. Demand is actually booming. We saw nearly 7 million foreign arrivals in 2025, and tracked rental occupancies actually climbed to 65% by mid-2025. So what's the real issue? It's undisciplined, unregulated supply. The market is finally maturing. It's sorting itself by quality and legal compliance, which, by the way, is a textbook sign of a healthy, stabilizing economy, rather than some bursting bubble.
Moving on to Section 2, the 2026 regulatory crackdown. We'll be looking at the moratorium and the looming deadline.
The government's response here has been incredibly swift. We went from this Wild West boom straight into authorities literally demolishing 48 illegal properties right on Bijan Beach back in July 2025. Then, following some severe floods, a strict construction moratorium was put in place. And now, we're facing a hard compliance deadline of March 31, 2026. The days of authorities just turning a blind eye are entirely over. Civil police are actively sealing unlicensed properties, sometimes even while guests are mid-stay.
So, the crucial point to understand is that zoning and licensing are no longer just, annoying paperwork you can deal with eventually. They are the biggest determinants of whether your asset actually survives. There's an island-wide ban on converting productive farmland right now, and authorities are using real-time satellite mapping to flag green zone violations. And if you aren't compliant, major OTAs like Airbnb and Booking.com will just delist you. A beautiful rice field view without the legal right to operate commercially isn't just a headache anymore, it is an immediate demolition risk.
Okay, Section 3, legal paths to ownership. It's time to talk about surviving the end of the nominee era.
Let's get one thing straight right off the bat. True freehold title, or hak milik, remains totally impossible for foreigners in Indonesia. That hasn't changed. But there are 3 highly functional, entirely legitimate paths you can take. First up, hak sewa. This is a simple leasehold, and it's great for a single lifestyle property. Then there's hak paka, which gives you a right-to-use title in your own name, assuming you have residency. And finally, the PTPMA, which basically means establishing a foreign-owned company. If you're planning a real rental operation, the PTPMA is exactly what regulators and your future buyers expect to see.
Now, the reason this PT-PMA route is suddenly so incredibly popular comes down to a recent regulatory shift. The government drastically cut the minimum paid-up capital requirement to start one. It dropped from 10 billion rupiah all the way down to roughly 150,000 US dollars. That specific drop makes creating a fully compliant, foreign-owned rental business vastly more accessible for serious investors than it was even just a couple of years ago.
Section 4, where capital is moving. Let's look at the big 2026 geography shift.
Smart buyers are actively steering away from the totally saturated, congested core of the Canggu corridor, where we're actually seeing heavy discounting right now. Instead, capital is flowing into high-growth areas like Uluwatu for its durable hedges and cliffside premiums. Or they're heading into Sanur for this really nice family-oriented stability powered by brand-new infrastructure. Meanwhile, places like Mengwi and Tabanan, well, they offer that frontier growth, but they carry massive zoning risks because of the moratorium. It's all about matching your geography to your personal risk tolerance.
Finally, Section 5, Gross versus Net Yields. Time for a much-needed financial reality check.
Look, if you only look at marketed gross yields, you'd probably think Bali was some sort of money-printing machine with ROIs touted at 15 to 20%. But the true story always lies in the net yields. Professionally managed assets generally land closer to 10 to 15%. And if you manage it poorly, honestly, you might net just 3 to 6%. That massive gap between these two numbers is the single biggest reason why investors who bought the guaranteed ROI pitch back in 2022 are so bitterly disappointed today in 2026.
So why does that gap exist? Well, because when you model your investment, you absolutely have to account for these heavy hidden costs. We're talking 15 to 25% just for property management, plus a 10% local accommodation tax that platforms like Airbnb do not automatically collect for you. That liability sits squarely on your shoulders as the owner. Add in platform commissions, full-time staff, maintenance, and realistic vacancy rates, and yeah, your margins compress pretty fast.
I stopped building properties and started building businesses. It was very hard to find a business with less than 15% ROI. This insightful comment from real estate investment manager Boris Simbas perfectly captures the market's evolution right now. We're moving far away from speculative real estate flipping and transitioning straight into disciplined business operations. If you treat your villa like a passive piggy bank, you're going to lose. But if you treat it like an active, hospitality-driven business, you're going to thrive. Because of this intense margin compression, consumer preferences have completely shifted. Capital's actively moving away from the basic, standalone private villa. Instead, investors are building managed clusters with shared amenities. Think in-house co-working spaces, paddle courts, and spas. A well-managed, one-bedroom suite in a high-amenity cluster is now frequently outperforming a standard 5-bedroom standalone villa that literally offers nothing but a private pool. So, to recap everything we've unpacked today, these are the absolute non-negotiable steps that separate the winners from the losers. You must rigorously verify your green zone compliance and your business licenses. You have to ruthlessly model your net yields, entirely ignoring those flashy gross numbers. You need to match your legal structure to your actual strategy. And finally, you should focus your capital on genuine, hard-to-replicate scarcity, like real cliff access or solid water security, rather than just a pretty design that someone can easily copy next door in a few months.
The truth is, Bali hasn't stopped being an incredible opportunity. It's just stopped being an easy one. With less speculative competition and a regulatory environment that's finally acting to protect the asset class rather than letting it eat itself, this market is prime for serious investors. The gold rush might be over, but a far more secure, professional market is taking its place. So the only question left is, are you ready to put in the professional work to succeed in it? Thanks for joining me on this explainer, and I'll catch you next time.